Hi, this is Zach here with the weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe. It is Sunday, the 16th of April, starting off with the FTSE 100, where we managed to end the week above that February resistance line. That was around, well, it's currently around 78.10. We've got the rising 50-day line at 77.17. That's probably the real line in the sand in terms of ongoing recovery from the March floor. The 200-day moving average also rising, so that's a pretty golden scenario for leading UK stocks, at least while we're above 78.10, and that February resistance line looking for as high as 82.40 by the end of next month. Obviously that sounds rather ambitious, but I think even getting back to where we are now was something that most people were not looking for. If we do go back below the 50-day line at 77.70, then it's probably 76.40 or so, which is the next and maybe final support that we would expect, and the worst on the downside we'd expect at the moment, initial April support. Onto the DAX, and here you can see that it's still a pretty strong picture. We had an unfilled gap to the upside through the or above the 50-day moving average at the end of last month. Another one over the last week, and the longer we stay above the old March resistance, 15,700, the greater the chance of a move towards the top of that rising trend channel from September as high as 16,500. Looking for that by the end of next month. Ideally that would be much sooner, possibly even by the end of this month. On the downside, below 15,700, the worst we're looking for at the moment is around 15,300 at the 50-day moving average, i.e. we'd have a bounce off the 50-day line like we had back in December. Moving on to the Dow, which still finding it difficult going over the near term, but at least we can see an explanation why it would be difficult, in the sense that we've hit that one-year resistance line there, around 34,100. That's obviously not going to be beaten easily. We failed there multiple times over the November-February period, and it wouldn't be surprising, obviously, if we failed there and then came back to test the floor of that rising trend channel from September. Currently near the 200-day line at 32,300, but let's go for the optimistic stance at the moment. Above the 50-day moving average, 33,000. We would be looking for a break of 34,100 and a push to the top of that rising channel, which is currently promising us a target as high as 36,500 by the end of next month. The only missing ingredient at the moment really is the way that the 50-day line is still falling. While it's still falling, there is obviously a risk of a breakdown. If that starts moving over to the upside over the next week, then one would be more confident that will break that one-year resistance line. On to Bitcoin, which has been the star of the show over the recent past, possibly not today, but here we've had an extended bull flag, which we had the breakout through around 29,000. We've now got a small flag here based around the 29,900 area. Above that, we're looking for 32,000 at the top of that broadening triangle from June last year. Above 32, there's not really much there between 32,000 and let's say 38,000. So that would be a very important level to break over the next week or two if we could do it. 32,000 by the end of the month would be a great achievement, I think, for this market. On to the stocks and on to Bradda head, and here you can see that shares have delivered a decent reversal off the lows, bullish divergence line there from back in February, a double unfilled gap to the upside, so a double bear trap gap reversal, and closing the week above the 50-day moving average, around 5.7 pence above that. We're looking for the shares not only to get up to the top of that falling trend channel from September, so normally around the 7 pence level, but actually up to 12 pence, perhaps as soon as the end of next month. So a punchy call there, but with all the technicals in place, especially that bullish divergence and the bear trap, that could be achieved over the near term. Onto a stock which was one of the heroes of a few months back, Caspian Sunrise. Great move higher over the October to February period. It looks like we're revisiting that bull run now with the weekly close above a rising 50-day moving average. That's currently around 6.8 pence, and above that looking for the top of that rising trend channel from August as high as 10 pence by the end of next month. Genflow has been one of the best performers of the recent past, helped along by its 2-year cash runway, which is pretty impressive. Here you can see that closed the week on a decent high, just trying to retest the old December resistance zone around 3.8 pence. Looking for currently as high as that August resistance line projection of 4.5 pence, perhaps as soon as the end of this month. The setup here, a bear trap gap reversal, so a bear trap from below the February support there around 1 3/4, gap through that. Unfull gap to the upside as yet, and all that's missing to really push the momentum here is the 200-day line to start rising properly. It already looks as though it's just starting to rise, but with those two lines, 50 and 200-day rising, we could be in the run up to a golden cross, and therefore 4.5 pence would be the minimum we would be looking for on the upside, while above the 200-day line at 2.5. On to Immupharma, where somebody was asking where the chart was here. In fact, I covered it on Wednesday, which I suppose was well before the big break to the upside. In fact, well, the big break actually happening on Friday, but we were early around the 2.25 pence area on Wednesday. We're looking for the 200-day moving average at 3.5 pence as the target over the next week or two. And big picture target here, actually, if things get going, would be up to this line here, which is as high as 6.5 pence over the next 2 to 3 months. So it looks as though we've got a decent turnaround on our hands, with the bullish, well, the uptrend line in the RSI window also helping that situation. Moving on to a stock which is probably the one which has had the most requests over the recent past, IOG. Closed up 4% on Friday, but it had a great week. And here what we're looking at is the way the shares have recovered the 50-day moving average, currently around 4.8 pence over the course of the week. And above that, we're looking for a minimum of the top of that rising trend channel from February at 8 pence. Ideally up to 10 pence, and the main resistance line there from last year by the end of next month, and probably, hopefully, much sooner than that. We've got an uptrend line in the RSI window as well, which should also provide further continuing momentum. Jaywing is next, and here you can see that the shares look as though they bottomed out, with the shares closing right on the 50-day moving average after a bear trap from below the February support there, around 4.5 pence. The longer we're above 4.5, the greater the chance of a move to the top of that broadening triangle from February, as high as 7.5 pence by the end of next month. Vanity is next, had a great RNS, I think, during the week, and here the shares building on that news. Unfilled gap to the upside through both the 50 and 200-day moving averages. That suggests that 50p is the minimum here over the next couple of weeks, and obviously looking for as high as 62 pence. And December resistance by the end of next month. Upside valid while we hold above the 200-day line at 35 pence. Moving on to Codal, which warmed the hearts of traders over the week and closed very well as well. But just looking for the shares to close above the 0.8 pence level, maybe over the next day or two, and then head towards the top of that rising trend channel from August as high as 1.1 pence. By the end of next month. At this stage, only well below Friday's support at 0.68, really delaying the upside scenario in any significant way. Premier African is the next stock, and here you can see that we've got the ongoing break higher here. Great support at the end of the week around the 0.95 pence level, and certainly while we're above that, looking for a resistance line projection target from September as high as 1.1 pence. By the end of this month. On to another stock which has had decent recovery noises, and comes in the form of Synergen, or Synergen. Here we've had a vertical move through the now rising 50-day moving average, looking for 24 pence, the top of that broadening triangle from the end of September, to be hit by the end of this month. Ideally, there's no break back below resistance on the way down at 13 pence. Sound Energy also looks like it's back in play at the moment. We've got a rising trend channel there from September, and broke above the 50-day moving average around 1 3/4 pence at the end of last week. Above that, looking for 2.4 pence over the next 2 to 4 weeks, especially as the 200-day line starts to go into an ascending pattern. Finishing off with UK oil and gas, which tends to be a rather difficult charting contender. The first reason is that this company tends to deliver fundraisers on a regular basis. The second is that we're a bit of a spiky price action, and we also tend to have a situation whenever there's a reasonable rally, then the shares just get sold off with or without a placing. Current situation is interesting though, because we've got a bear trap gap reversal. We did have one back in February, and obviously that failed. We had another gap higher last month, and that failed. But this one looks a little bit better than those. The bear trap gap reversal there through 0.06 pence, and above that looking for up to 0.09 pence over the next 2 to 4 weeks. Sellers or placings notwithstanding. That's it from me today. More updates during the week.